1,000 euros per month in passive income forever from dividends? How big portfolio do I need to make it posable? Today I'm breaking down exactly how I calculated that, why it's achievable, and how I'm building towards it right now. Let's talk about why compound interest is so powerful and why dividends are a great way to achieve financial freedom. My strategy overview. I was looking for strategy that works in long term and requires minimal effort once I set it up. So here's my investment strategy, and it has two distinct phases. Phase 1, accumulation. Right now I'm investing 100 euros per month into accumulating ETFs. These are ETFs that automatically reinvest dividends, so I don't pay taxes on payouts each year. This is crucial for tax efficiency in Europe, where taxes on dividends can be hefty. My current way of investing is 60% to VHYL, Vanguard S&P 500 All-World ETF, and 40% to EXUS, Stracker's MSCI World ex-USA. The goal? Let compound interest do the heavy lifting for 3 decades. I won't touch this money until retirement, letting it grow and compound. Over time, the returns really start to add up. Phase 2, distribution, post-retirement. When I retire, the strategy will shift. Instead of accumulating, I'll focus on distributing ETFs that pay dividends directly to me each month. This is where the 1,000 euros per month income comes from. The target ETFs for retirement. Let's dive into the 2 ETFs I've selected for my retirement income strategy. These are going to generate that monthly income I'm aiming for. First, SPYW. This one's focused on large European companies with a track record of increasing dividends over time. Think companies like Nestle, L'Oreal, and LVMH. These companies have been consistently profitable, and they have a history of paying growing dividends. Key stats for SPYW. Dividend yield for percent per year. This gives me exposure to some of Europe's most reliable dividend payers. Why I like it: stability, predictability, and it works well with my tax situation in Europe. Second, VHYL. This is a global counterpart, giving me exposure to companies worldwide that have a strong dividend-paying history. So, I get some of the best dividend payers from the U.S., Asia, and emerging markets. Key stats for VHYL. Dividend yield. 2.78% per year focus on global companies with strong dividend histories. Why I like it: it helps me diversify, and is a hedge against potential economic slowdowns in Europe. Now, let's talk about the combination of these 2 ETFs. Here's why I chose a 60-40 split. 60% SPYW for more yield and European stability. 40% VHYL for global diversification and growth. Result? A balanced, sustainable income stream that I can rely on in retirement. The math. How I calculated 342,857 euros. Let's get into the numbers. How did I come up with that 342,857 euro target portfolio size? It starts with my annual income goal. I want 1,000 euros per month in passive income. So 1,000 euros per month times 12 months equals 12,000 euros per year. That's my target annual dividend payout. Then calculate the blended dividend yield. My portfolio is 60% SPYW with a 4% yield and 40% VHYL with a 2.78% yield. To find my combined yield, I use a simple weighted average formula to get is almost equal to 3.5% yield. This means that for every €1 I invest, I get 0.035 euros back each year in dividends. Then divide annual target by yield. Here's the formula. Required portfolio equals annual income goal divided by blended yield. 12,000 euros divided by 0.035 equals 342,857 euros. That's it. That's my target. If I have 342,857 euros, and if it generates 3.5% yield, I have 342,857 euros times 0.035 equals 12,000 euros per year. 12,000 euros divided by 12 months equals 1,000 euros per month. Every single month for life, no work required. How I'm building towards 342,857 euros. I know what you're thinking. That sounds like a huge amount of money. How am I supposed to get there? And here comes the strong influence of the compound interest, which will work in my favor. Right now, I'm investing €100 per month, but as time goes on, I'll increase that contribution. Let me show you the projection. Year 5, €7,000. Year 30, €115,000 to €140,000. But wait, I can do better. Let's say I increase contributions to €200 per month in year 10 and €300 per month in year 20 as my income grows. With those adjustments, and then assuming I get returns a little better than 7%, I could reach €250,000 by year 30. Still not €342,857? This is where extra income help. Bonuses, side hustles, inheritance, or even just adjusting my target to €750 per month instead of €1,000. That would require a smaller target portfolio of €257,143. The point, the goal is achievable. Why am I confident about this plan? 1. Diversification. 60% European stability, 40% global exposure. If Europe slows down, I have global exposure. If tech crashes, I have dividend aristocrats. This is balanced. 2. Tax efficiency. Distributing ETFs allow me to manage capital gains strategically. I'm not forced to pay taxes on reinvested dividends, only on actual payouts. This makes my money work more efficiently. 3. Passive income, not capital depletion. I won't be selling my portfolio every month to generate income. I'm living off dividends only. The €342,857 stays invested, keeps growing, keeps generating income forever. 4. Time is my biggest asset. I have 30 years. That's enough time to weather any market crash, any recession, any correction. Short-term volatility is irrelevant. 5. Simplicity. 2 ETFs. That's it. No market timing, no day trading, no complex derivatives. It's all about setting it and forgetting it. This is my plan to financial freedom. If this resonates with you, subscribe. Let's grow together.